Hey everybody, just doing a quick little market update for Bitcoin. Big things obviously for today. We had ISM data that came in bad. Initial jobless claims lower than expected as well. Tomorrow, we are expecting quite a bit of pre-market movement, especially given that all the jobs data, non-farm unemployment, and average hourly earnings are coming out 1 hour before the New York Stock Exchange opens. So keep an eye on that. And then we have Powell speaking 2 hours-ish after the market opens. So keep an eye on that as well. Pretty volatile pre-market and then market open going into the morning session is at least expected. And then looking a little bit into next week, it's going to get a bit nuts probably from Wednesday through the end of the week. And yeah, just keep that in mind. Looking at Bitcoin specifically, I'm not going to look at funding rates and stuff like that. Funding rates are not great, but looking specifically here on the order book heat map where we have some resting orders, we do have a pretty decent chunk, a couple of mil, 50 mil or so, stacked between 81K and 80.7. This is good, but we also have liquidity and liquidations below it. Be very skeptical if we do happen to break down and lose the lows that we just made at 81.5. Likely we're going to start sweeping into that because there is still a decent amount of liquidations underneath us that we could take. Below that, it's pretty thin until we start getting way into the low 70s. Then we have plunge protection stepping in much, much farther below us. But in general, we do still have orders stepping in here below us currently with not a whole lot of pressure to the upside, which is at least decent in the overall move. So the big things here, very simple. Watch that levels. If we do break down, look at the reactions here. If they do get filled, then we'll likely get some type of reversal. If they don't and they pull them, likely we're going to go lower. Looking over at the chart itself. So what I talked about yesterday was I posted it right before the tariffs announcement. I said, hey, watch out for the short squeeze. We actually did get a short squeeze from about a 1K, about a 2K short squeeze up to 88.5 until we saw the major reversal. So even on the 4 hour, it was terrible. Almost impossible to trade down on the 4 hour. However, we go a little bit lower in time frame. Pretty clear that where we actually failed was, at that 20 UTC close, going into the 21 or the 21 UTC open. At that point, it was done. We had a major rejection of all the resistance above us. We created another resistance area below us, or above us, excuse me. And then we come back down. We've done the Q2 test. We've created another resistance, and then we've broken into the low structure. So on the lows that we actually have down here at 81, we did break some new lows. We wicked it, but we did not close underneath, so that's still potential. We are underside retesting the weekly open. That's been holding us down for some nice little scalps intraday. If we do want to start gaining something back, we need to see a gain locally to start regaining the Q2. And then we're going to see some, quick little retests and then potentially retesting back up towards 83.4 into this local resistance. Now, from that zone, this resistance is still technically shortable. The price action is still quite terrible after we've had that big flush out by tariffs. However, there is some ways we can get out of it. Getting back above March is the key to this entire structure. We have now broken down very, very hard and fast, giving us some more resistance zones. So even gaining March, likely we get a rejection off of the highs at 86. But for the time being, we still have priority down. It's completely changed from yesterday to today, especially with this major rejection. So what are we looking at? A bit higher time frame here. Pretty simply, we're doing 4 hour underside retest of the Q2, the weekly open, and like all three daily opens going into this week. So this is all bearish in the sense that we've tested the lows. We technically wicked underneath it. Any new lows under this 81.2, this is the level to hold. If we lose that, we are going straight to 80.1. If we lose, and likely we won't see holds just because of the liquidations here. So if we do break down and lose that, the only way we can get out of that is a major bounce back that starts to squeeze and regain the March. That's about the only thing we can really do, and you're still making lower highs. Remember, making lower lows and lower highs, it's still downtrending. This structure here has already broken down, and we've broken whatever upside trend we had. It's gone. We've now lost it to come back to the downside. Until anything major changes, just remember we do have liquidity and liquidations below us. The number one thing we look at is like really thick overlapping, like lower leverage stuff. Here we have a combination of 50x to 20x, pretty big liquidations in this area. So like I said, if we do get since we are failing levels, if we do get a nice move down towards 80K and then a very strong buyback that gets us back above some levels, there is a potential regain. But again, we want to see that as a very strong wick. Basically, we wick down into it really hard and the buyback closes back above, previous 4-hour low structure. If we can do all of that, it actually doesn't look all too bad to potentially retest higher. In the grand scheme of things, though, yes, we are now losing levels to go lower. So play it as such. Watch for the volatility going into tomorrow, and yeah, hold on to your seats. We could definitely go lower if the US is starting to tilt very hard into recession territory. That's it. Take it easy. Catch you tomorrow.